I am pleased to introduce our speakers for the next segment, Energy Infrastructure for the Future. Energy is the foundation for building a competitive and resilient economy in BC, powering homes and businesses and supporting jobs, from electricity and hydrogen to LNG and oil and gas. Canada and British Columbia can supply the full spectrum of energy products and clean technologies. This panel will discuss the permitting, partnerships, and investment needed to build energy infrastructure that supports our economy, affordability, and sustainability. Please welcome up to the stage President and COO of Trans Mountain, Michael Davies, Senior Vice President, Capital Infrastructure Project Delivery for BC Hydro, Melissa Holland, Executive Vice President, Energy, Resources and Industry at WSP Canada, Rehan Wasti, General Counsel and Vice President, External Affairs for PETRONAS Energy Canada Limited, Shannon Young, and moderating this panel is partner at Bennett Jones, David Little. Please give our panelists and moderator a warm welcome.
All right, thank you. Can everybody hear? That's great. I'd just like to say that, first of all, getting into this area of infrastructure, it was a very exciting area at the time, and when I started, which is about 30 years ago, and at that time it was, let's build, let's do procurement, let's do the contracts, let's negotiate, and the negotiations sometimes would take a year. Now, negotiations tend to be shorter, but the front end is taking a lot more time. So definitely there's been an extension of time and a great increase in cost. So I'm very pleased to moderate this panel, and we've got some questions. But first of all, we'd like to start with some opening remarks, introductions from our panelists themselves for their organizations, and anything they'd like to tell you. First, we're going to start with Rehan.
Oh, thank you. Thanks everyone for being here with us, and really interesting discussions this morning. I'm Rehan Wasti. I'm with WSP Canada. I look after energy, resources, and industry. So what that means is the power and energy sector, as well as nuclear, and I also look after our mining and metals sector. WSP, we are the largest Canadian-based engineering firm globally, upwards of 80,000 people now. Also the largest firm based in Canada itself, with close to 14,000 employees across 130 offices. We're close to 1,700 people in BC alone. We contribute across multiple sectors, property and buildings, transportation infrastructure, earth and environment, and the sector that I look after, energy, resource, and industry. I thought I'd open today with just a bit of an overview of what we're seeing across Canada when it comes to capital investments in the energy sector, to give us a little bit of insight on what's driving that, why we're here talking about the future of energy infrastructure, and how do we make it happen. I can safely say that we're well on our way to building the future of energy infrastructure in Canada. If you look across all the different investments that are happening currently, the projects that are being discussed, the ones that are being executed, the ones that are coming online, we're well on our way. And that's really in response to the demand that we have currently and that we foresee in the next several years, accelerated, if not exponential demand that's going to be outpacing the current supply that we have. That is, primarily due to, again, starting with shifting in personal consumption habits. Some of that has to do with climate change, and a lot of that has to do with our own digital footprint expanding as well. I mean, all of us can probably think of that as well on our own. Transportation, in terms of electrification, continues across the country. There's also an increase in consumption by industry itself, and new industries that have been introduced that are highly energy intensive. We mentioned data centers a little bit earlier. There's a widespread adoption of digital tools, not just for the personal use, but also by industry, as well as AI, and we have the urgency to power the North. Not only do we need to address the demand, we have to continue to decarbonize. We need to ensure that the energy that we're producing, we can safely, efficiently transport it to where it's needed most and where it needs to be consumed. And we have aging infrastructure that needs to be upgraded across the country, province by province, and adding new transmission distribution networks that's going to enable us to integrate the new energy mix that we're going to be seeing in the future. If you look at the challenge ahead of us, most estimates tell us that we're going to need to double our current capacity in energy production within the next 30 years. And that's an estimate I've been hearing about for the last 10 years. So take that into perspective. If you take from what's required, if we look at what it took us to get to the point where we are today, it took us relatively 60, 70 years to get to the current capacity levels that we have right now in this country. And give or take, 60, 70 years. We're going to need to add the equivalent of that in the next 20 years, maybe 15 years. So when I come back to saying that the future of infrastructure and building infrastructure and energy is currently underway, the future is now. We're planning what we're going to see in the next 10, 20, 30 years, what that energy mix is going to look like now. And these investments that we're talking about, a lot of it is driven primarily by regional and provincial realities. Each province is leveraging their own natural resources, their specific infrastructure needs. If you do a quick assessment province by province, you'll see there are some commonalities, but some specifics depending on the realities of provinces. Atlantic Canada, investments in hydro, nuclear, but the massive potential of offshore wind. Quebec is on an ambitious plan to spend $200 billion within the span of 10 years to add capacity in wind and hydro, but also looking at upgrading its infrastructure. Similarly in Ontario as well, with the added investments and large-scale investments in nuclear, both conventional and in SMRs. We're investigating SMRs in the prairies as well. Alberta, again, there's no secret, predominantly from the energy sector, investments are in oil and gas, but also transportation of energy. And closer here in BC, I mean, again, it's basically a mix of all of that except for nuclear, as well as building out infrastructure to be able to optimize the export of energy as well as an economic driver. We're seeing projects move forward. I mean, we're going to talk about how quickly we can see projects move forward, but I can tell you that I'm seeing more and more innovation than I have ever before. Not only in the type of projects, I mentioned what we're seeing as current investments right now, but we're also investigating technologies in hydrogen, waste energy, biofuels, renewable natural gas, battery storage. I mean, there's a host of options ahead of us that we're still going to continue to develop and integrate. But we are seeing meaningful engagement for the first time, I would say, at least in most provinces, with all stakeholders and especially our Indigenous communities, and the active participation of Indigenous-led companies in major projects, which is helping us move things forward. We are leveraging AI and digital tools across the board to advance projects. We'll talk about that a little bit today, I think, and depending on the questions we get. But I can tell you, with all the challenges that we see, I don't think we could be closer to the analogy of attempting to build a plane while in flight. I'm sure we've heard that often, but we're also trying to course correct continuously, try to get to our destination. So, having said all that, it's an extremely exciting time to be in energy, and I'm really happy to be here to talk about it.
Great. Thank you, Ray. Thank you for providing a great context from the everything down to British Columbia. Appreciate that. Melissa, just ask you to make some opening remarks, please.
Yeah, sure. Thanks, David. Really a pleasure to be here. My name is Melissa Holland. I am privileged to work for BC Hydro. We power the economy of British Columbia. I have been in the energy sector for more than 25 years. My team is responsible for delivering more than $25 billion of capital infrastructure that serves the province. I lead project delivery, environment, Indigenous relations, and properties. And what's really interesting for me today to be on the panel is we're talking about energy, and we've got energy producers, and we supply energy to energy producers. So it's sort of an interesting mix. So looking forward to how this conversation goes. Thank you.
Okay, thank you. Next, Shannon, I'd like to invite you to make some opening remarks, please.
Sure. Thanks so much, David. I'd like to say congratulations to Bridget and your team, and thank you to Bennett Jones for bringing us all together. This couldn't be more timely to have this discussion in terms of what we've seen out of the budget this week, as you mentioned earlier, and how critical and fundamental healthy, investable natural resource sector is in British Columbia. So very happy to be part of this conversation. So I'll just share a bit about PETRONAS. PETRONAS invested in British Columbia over 14 years ago. And PETRONAS is it's a Fortune 500 global energy company with our global headquarters in Kuala Lumpur, Malaysia. And PETRONAS is one of the largest LNG developers in the world, and is one of the largest natural gas resource holders in British Columbia. And what brought PETRONAS to British Columbia 14 years ago was an integrated natural gas LNG project. And the attributes that appealed to PETRONAS 14 years ago remain the same in terms of the low carbon natural resource in the Montney, and very much appreciated the presentation from Dane earlier, which I think is excellent for us to sort of level set what the natural resource opportunity is for British Columbia. But the proximity to the Asian markets, the cooler temperature, the skilled workforce, that was really what drew PETRONAS to Canada and to British Columbia 14 years ago, and that all remains the same in terms of the fundamentals. The last 14 years have been, I'd say, very challenging both for the upstream and for LNG development. And again, the panels earlier have set out what some of those challenges have been around policy and regulatory and permitting. I think we're all very grateful that PETRONAS persevered through this in collaboration with British Columbia government, federal government, and our Indigenous partners to see the successes that we see this year, where we've had now over 46 cargoes from LNG Canada shipping our responsibly sourced natural gas product, LNG product, to the global LNG market. So it's really important to celebrate some of these successes and also to see the progress with wood fiber, with Cedar LNG, and see Slism's LNG with the intention of moving to FID later this year. So with that, I think we look at the last decade and what should have been, and we now have another window of opportunity to meet this growing global demand, particularly in Asia, for Canadian LNG. I know we'll get into the discussion in terms of what's driving that. So we do now have this other window of opportunity, and so the question before all of us is, Canada's open for business. We're seeing great signals from, again, all levels of government, and even the public polling really shows that support. But can we get our house in order to really meet this opportunity that is presented to Canada once again? And I think a lot of us see that this will probably be the last opportunity. And so are we up for it, I think is the question that's before us.
Great. Thank you, Shannon. And just tying back to my welcoming remarks, back in 2019, 2020, we were talking about the LNG industry then, and it's really good to see that that's come to fruition. Thank you. Mike, just over to you to give some opening comments.
Yeah, thank you, and thanks. It's great to see such a great crowd interested in this important sector in the economy, so thank you all for coming today. Trans Mountain operates a petroleum pipeline. We transport oil and refined products from Edmonton to the Pacific Northwest. And of late, with the completion of our expansion, our business has turned now to supplying the Pacific Rim. So we used to be the critical supplier of motor fuel to the I-5 corridor in the Pacific Northwest here, but now we're supplying motor fuel precursors and petroleum feedstock to the Pacific Rim. And that second part of the market is kind of new and developing. It's quite different. The refinery complexes in Asia are quite different than they are here. So it's kind of shifting how the products that we move are being consumed. Trans Mountain provides the only sovereign egress out of the Western Canadian Sedimentary Basin. And that's really important because Canada has a wealth of resources, and the remarks I'll make today, they apply as much to oil as they do natural gas, as they do to critical minerals. We are blessed with an incredible wealth of resources that other countries don't have, but they're not worth much without linear infrastructure to get them to market. We are the fourth largest reserves of oil in the world, and we are the fourth largest producer of oil in the world. And yet, before our TMEP expansion, we only had the ability to trade with one market, which is the United States. So now, after the pipeline is being expanded, we've created access for about 10% of what's produced in Canada to get to world markets. And why that's important is in the 15 years that it took us to develop this version of the project, there was another attempt that we had that took 5 years before that, but this version we just brought in service over the last 15 years. It's estimated that about $50 billion was lost in terms of rent extracted by the United States in the form of lower oil prices. They were able to buy Canadian oil for cheaper than it would have been sold for if it had access to broader markets. And egress was constrained, and the destinations matter. So in the first year of our operation with the expanded pipeline system, $13 billion was remained in the country. $5 billion of that went to governments in the form of taxes and royalties. And so that's part of the reason why we're seeing a renewed interest in West Coast access. This is the reason why the Government of Canada took the very significant step a number of years ago to buy Trans Mountain to ensure that the project would proceed in the face of significant political risk. And it's also why we are on the eve of just finishing this 15-year endeavor, which was the Trans Mountain expansion project. You know, within weeks of getting first oil to Burnaby and starting the pipeline up a year or so ago, our phones started ringing off the hook with people wanting more. And so we're now working on powering up the existing pipeline, optimizing the asset that we already have to add another 300,000 barrels of capacity from Edmonton to world markets. So I'm very proud of what was achieved by Trans Mountain and the team there that I work with over the last 15 years. There's a lot of endurance, a lot of things were overcome. It's a long saga. There's probably many people in this room who were either involved in the project or their companies were. I can see a couple smiling faces here already. We had 15,000 people working for us at the peak and about 35,000 people employed over the course of the project. As we look forward, Canada is facing significant challenges to our economic security. The geopolitical situation is moving around us. It's also why there's more interest in West Coast access. And we as Canadians, we need to decide if we want wealth from our resources, if we want wealth from our petroleum resources, and if we do, we need to do things differently. So, you know, we have Canadians are really smart and we're really capable. We have a good, solid government here. I think we have opportunities around regulatory efficiency. We have opportunities around regulatory certainty. And one of the biggest challenges in that phase is the path that we're on for economic reconciliation with First Nations. I don't want angry letters. I'm a big fan. It's something that we have to do. It's the challenge of our generation. We have to work our way through this. Now is not the time to stop. Canada without economic reconciliation will be worse than what we're dealing with now. But it does, thank you, it does present a challenge for our generation that we have to work through. And so we need to decide what we want to do in order to create more certainty. Capital seeks out certainty. And the biggest challenge I think we have in Western Canada, maybe in Canada as a whole today, is the lack of that certainty to attract the investment that we need to build our economy.
Thank you, Mike. Okay, well, obviously we have a powerhouse panel here. I'm going to ask some questions, and I appreciate all the questions. I'm seeing them here on screen from the audience. I'll try to weave them in as I can. And Mike, just to build on what you said, and I'll give you a break because you said a lot, but I'm just going to ask a first question. How important are large energy infrastructure projects for British Columbia and Canada? Just any perspective, and maybe I'll just start from and go down from Shannon.
Sure, absolutely. Well, Mike shared some of the numbers from Trans Mountain expansion. If you look at LNG Canada, that's the largest private sector investment in Canadian history. So that was a $40 billion project. And so that alone just shows, just the raw numbers in terms of the impact. We look at our budget for British Columbia, so much of that is contingent on, is relying on forecasting the royalties from natural gas production. And we heard earlier from Dane again showing the market differential that we're seeing right now, and really the stranding of natural gas in British Columbia. That can only be remedied, and the gap can only be narrowed through investment in major infrastructure projects. So increasing pipelines and also building future LNG projects. So it's really core, just in terms of domestic economic reality and what drives jobs. What we're also seeing, and we're all very well aware of, is the need for market diversification from the U.S. tariffs. And then just the new geo-economic reality in terms of our national sovereignty. So all of that is driving the need for continued investment and to be able to drive foreign capital into the country to help to support those major infrastructure projects.
Thank you. Thank you.
Yeah, maybe just to continue on that, I think I'll take the perspective of, how important are they? They're necessary, absolutely essential. Impossible for us to meet our energy demands and our objectives for the future without investing in capital, and energy is not cheap. To produce is one, but production aside, building out that capacity will take time and effort, and those are major projects. The added advantage for us also is, it's going to give us a new generation the chance to learn how to build projects, to develop that expertise. For us then to become a center of excellence globally, as we have in the past, to be able to export that capability to build also, not just in Canada, but also beyond our borders. It's going to give us the opportunity to provide jobs for those that are entering the job market now, extremely important. We're seeing a shift in having to replace a large part of the workforce. But we need projects to be able to do that, to train people on it, to give them the opportunity to work. So it's not just trades, it's also technical skill set. It's also going to counterbalance some of the brain drain we've had in the past, where major projects and major capital has been spent outside of our borders, and our experts have gone there. So there'll be a chance to bring some of them back, but also train those that are getting into the job market now. So to me, it's absolutely essential.
Thank you.
To the equation.
Thank you.
Speaking from the BC Hydro perspective, large energy infrastructure projects are absolutely essential for the province, for our economy, and for Canada. And I reflect back on the big build era, and if we did not have the visionaries that we had in the 60s and 70s that saw the development of the Peace and the Columbia systems and the build out of large transmission to bring power to the Lower Mainland, the province would not be what it is today. And we're at this precipice of another great build-out opportunity to drive economic prosperity. And we look at a project like North Coast Transmission Line, so 450 kilometers, Prince George to Terrace, another phase to build north of Terrace to unlock critical minerals, to electrify LNG, to ensure that the port facility is connected to green energy and can help transport our products into a global market. A project like North Coast Transmission Line is expected to unlock $10 billion of gross domestic product for Canada, up to $1 billion in provincial revenues. That's for British Columbia. And then you think about good jobs and healthy communities during a construction phase and an operation phase for all of the projects that North Coast unlocks. And so essential to our economy and just an exciting time.
Great. Thank you, Melissa. And Mike?
Yeah, great.
Back to you.
What Melissa mentioned, it really is. I was born and raised in BC. It strikes home with me. BC was kind of built in the 1950s. BC Hydro became a thing, BC Ferries, the West Coast gas pipeline, the gas distribution system, our Trans Mountain pipeline, all that stuff was all built in the 1950s. The highway system was all built in the 1950s. And the projects that we look at today pale in comparison to what was built back then. And I think the things that we're achieving are big and important, but we've lost some of our ability to promptly execute large-scale projects. I'll just close with from an oil gas perspective, it's, depending on how you measure it, it's 3 to 10% of Canada's GDP. So the exploration and production upstream part is probably about 3%. When you add in all the other supporting businesses, it's about 10%. And so it's really important to the lifestyle that we have here in Canada. And linear infrastructure is required in order to get that stuff to market.
Thank you. All right, let's go to something that people have touched on quite a bit, but just to ask from your perspective, what are the challenges to energy infrastructure projects and how can we address the challenges? And maybe we'll start with Rehan.
Sure.
Is that a surprise?
No,
we'll
not a surprise to get started at all.
down.
No,
Otherwise,
it's fine.
Shannon would always be first. So.
No, that's fine. That's fine. I expected to be first. That's fine. No, I think, look, in challenges there are many, and I'd be interested to hear what my fellow panelists think as well from their perspectives. I think what we're seeing as touched on already earlier, across the country, but not just in the BC as well. We have to do projects in parallel, and we have to do them at a scale, understanding that we've built great things in the past, but our reality now, given the labor shortage we have, it makes it very difficult. So there's challenges there. Obviously, permitting is one, and again, I'm just telling all of us that it's Thursday today, but permitting challenges are an issue. But we can work through those. Those are things that are under our control. But really, what I find extremely difficult is that piece around on having the right people, and can we leverage technology to move things forward even faster. We are also competing with resources. So we lack of resources in our own industry, but more and more we're seeing the next generation of workers that are coming in moving away from technical fields as like engineering and the type of work that we do in our field to move projects forward. We're competing with software, we're competing with fintech. There's a lot of competition out there for the bright minds that are coming into our industry. So to me, again, we're shining a spotlight on major projects today, how important they are. But I think that is one of the challenges that we have is really providing visibility into what we're doing so people jump on board.
Thank you.
Maybe I'll just add in, I agree on the regulatory permitting. I want to give a shout out to the province. We're working through streamlined permitting to improve permitting turnaround timelines, which is fantastic. We have some projects designated under the BC Energy Regulator, which is giving us a faster pathway as well. I agree on workforce. I worry about, do we have enough engineers? Great time to be doing an engineering degree. There's tons of work. I worried about skilled labor, so those relationships with trades training and that investment in skills development for the province, really, really key. The other area that I find really challenging is the length of time it takes to build large transmission and generation projects. So transmission line, a big bulk system line like North Coast Transmission Line, it's a 10-year project. And what we're finding is customers' timelines to come on are much faster than that. But their final investment decisions are partway through where we would already want to be in terms of building. So that's a real mismatch. And you can be visionary, and I saw a question around why aren't we building sooner? Well, what if the customers don't come? Then the ratepayer has this asset that's unused that it has to pay for. And so we find ourselves in this balance of trying to get projects up and running soon enough to meet customer needs, but not having a stranded asset that ratepayers are paying for. And so I would say that's a challenge for large hydro and transmission infrastructure.
Yeah, look, I'll kind of reframe that question. I'll say the things that we have in Canada, the things that aren't a challenge is opportunities. We've got a wealth of resources. We've got smart, hardworking people here. We have no problem executing on the technical aspects of constructing complicated and challenging infrastructure through the mountains and through everything else. The opportunity we have, as I said in my opening remarks, is around attracting capital and the lack of certainty. And that's what makes it hard to develop projects here. It's the timeline. A resource industry business cycle is probably about 5 years. It takes us 2 or 3 business cycles to get through, and probably 2 or 3 election cycles to get through getting a project from concept into construction. And so, that can be improved by, regulatory efficiency. It costs $1 billion to get a certificate. The determination of public interest for a large-scale linear project. That's money at risk from investors before you're even sure whether you're going to be able to proceed. Once you get that, you still have to go through another year or 2 of permitting. We had to get 2,000 permits, provincial permits and municipal permits on the Trans Mountain expansion project after we had a determination of the public interest. We ran Canada's largest archaeology project to build the project. So there's a lot of sort of uncertainty. I guess you question whether we're at the point of diminishing returns in terms of the regulation that we have. I think Trans Mountain demonstrates that a project can be built responsibly in Canada, and it can be built without significant environmental impact. As I said, I'm very proud of what we did, but how long it took and how much it costs reflects the expectation of Canadians as manifest in our regulatory regime today.
Thank you, Mike. Shannon, challenges?
Yeah, absolutely. I think I'd just build off of all of the excellent comments and comments from this morning. So, I'll speak just briefly on the permitting and then policy and then the solution. So, on the permitting side, and absolutely agree, Melissa, you really, well articulated the challenge in terms of being able to build out the infrastructure that's needed before having the customer base. But then, Mike, you've well articulated this in terms of the challenges of how much capital outlay there has to be before you get the regulatory certainty that you need. And I think that was what was incredibly destructive with the first round of, the 2012 LNG opportunity, is that so many investors came into Canada and then they had to invest billions of dollars until they got to the point that there wasn't really a regulatory path forward that was feasible. And in PETRONAS' situation with the PNW LNG, they actually, just conditions were added post, years of the regulatory process that were seen to be unfeasible. And so it's hard, how do you get that capital back in and that investor confidence back into the country? And I think a large piece is risk in terms of what is, from the regulatory perspective, from BC Hydro, what is the appetite for risk to be able to be, making some of those investments ahead of when you have full certainty, or allowing proponents to create an inventory of permits, for example, in the upstream, so that you have the ability to grow when the market signals are there. We've really boxed ourselves into, I think, a very low-risk regulatory approach, and I think that's really fundamental. On the policy side, on the climate, I think federally in particular and within British Columbia, that the governments were using climate policy to really set, what had been characterized as stretch targets or ambitions that were to drive innovation and drive an energy transition. And, the reality is that the capital hasn't been there to support that, and the technology hasn't been there, and yet our environmental and climate policy is still setting these unrealistic targets. And I think that the faster and the more cohesive the correction of that, the better for investment. And we look at PETRONAS, we compete against 16 other global jurisdictions for natural gas for capital into British Columbia. We are the only jurisdiction that has a price on carbon. Some of the countries like Indonesia, they're bringing forward a price on carbon, but it'll be, I think it's 6 times lower than when we are in British Columbia. And so when you're sitting around the boardroom table in these national or global headquarters, it's very hard to see how Canada can compete. And as I think you said, Mike, capital needs certainty. One sort of final comment in terms of what's the solution, and Selena had mentioned this as well, and it's very much aligned with where PETRONAS has been advocating, is to have a comprehensive natural gas LNG strategy. And that brings in the discussion of all of the infrastructure in terms of working with BC Hydro, but it's setting, what is our export target, and how do we get there, and what is the window of time that we need to be able to get the permitting and the policy in place to meet that, this next window of opportunity. And so I think that's, if we're serious about this, it really is setting very clear targets and a roadmap for how British Columbia can have the infrastructure in place to meet this opportunity.
Thank you. Just a heads up, Melissa, I'll ask you first on the next one. Just picking up on things you just said, Shannon, about capital and risk, and I just have a question. Who's best positioned to lead energy infrastructure projects? I'm just saying lead, I'm not saying pay forward. So it's open-ended as to how you all interpret this, but who's best positioned to lead energy infrastructure projects? The public sector or the private sector, or some combination?
I think when we're talking about projects of the size and scope of Site C, which has added 8% to our ability to serve, and you talk about a scale of a project and the time, I do believe that is a public sector investment. And the way BC Hydro has been built out, and as a crown, we reinvest in the province. So we have a great borrowing rate, and the benefits come back to British Columbia, and that's the benefits of having a public ownership system of this fantastic set of assets. And you don't always get that with private investment, So the benefits of the system go back to reinvest and keep rates low for British Columbians, and we have one of the third lowest rates in North America, and that is just something phenomenal, and that attracts new investment and new economic opportunities for the province. It is a please come and locate here because we have this fantastic green renewable resource and it's affordable. And so I do think on large infrastructure like big transmission lines and big hydro facilities that's best done by the public sector.
Thank you. And of course, we'll just say large-scale public policy is determined by government.
Yes.
So,
yes.
So I'm not meaning to put anything on the spot. It's just very interesting with capital and risk and just your perspective on this. Maybe Mike?
Yeah, look, I think in this question, it's important to differentiate perhaps between should and could. Yeah. And in my industry, I think the reality is, historically, I think ideally it would be private investment that would, run the infrastructure for pipelines, and that's traditionally what it's been. When you look more closely, though, at large-scale infrastructure projects in Canada, typically there is some sort of public ownership or public risk reduction. And so in our example with the TMEP expansion, as I said in my opening remarks, Kinder Morgan investors, it was not their job to take on dueling provincial governments and a federal government and conflicts. And so private equity wanted to exit, and the project was so important for Canada, and the political risks around it were so significant, it was a natural role for the federal government to wade in and buy it. Now, one of the things I want to point out is our project was often being characterized as a subsidy for the oil and gas industry, and it is not. The federal government bought a fully functioning company with a long history. They made sure that the project could get built. It's now in operation, and we're spinning off. Last year, our first year of operations, $1.7 billion in distributions and debt and equity payments. So, thank you. So when you all own it. So it is a going concern, and our project to expand or to optimize the existing asset will help grow those returns as well too. So, ideally in a democracy like ours, private equity would be able to come in and get these projects done, but the reality of it is that depending on the scale, and certainly for the larger scale projects, it's not working. And that's why you see the Major Projects Office that the federal government has set up is a way to help projects that are significant and important to Canada get over the regulatory hurdles and get into a secure investment.
Thank you, Mike. Shannon?
Sure. Yeah, I agree with everything that Mike has just set out from the industry perspective. Major projects will only happen at pace and competitively through collaboration. I think where we see the role for the public sector is really on de-risking major projects. And where a project is strategically important but economically challenging. I think definitely that was how I would define the role for when there is a role for the government to engage, and we see that with some of the infrastructure that there's a policy driver that doesn't necessarily mean that it's economically the decision that private capital would fund, and so the government needs to play an important role.
Thank you. Rehan?
Yeah, I would say as a consultant, I kind of find myself between a rock and a hard place. I want to make sure that I'm as politically correct as possible between the public and the private sector. We serve both clients. I'll give you, our perspective is obviously both are required. It's a collaborative approach, and it really depends on the nature of the asset that's being built, the timeline, what type of capital is required. But if we break it down a little bit more, I see it as, public-led projects allow for opportunity for capital to be able to be spent, limiting roadblocks for projects to move forward, and private sector or private company projects, really give the opportunity for innovation. Innovation really is led by the private sector. So I think it is a combination of both. I think we can get to a point where if we leverage both strengths, we can move projects forward even faster. Investments required from both. But I honestly can't say that one led or the other is better because, from our perspective, we work with both. But it really does depend on the nature of the asset. But I will point to innovation. I think innovation is key So allowing for the private sector to be able to innovate as much as possible to make sure that even public sector projects are successful.
Thank you. Mike, this next one, we'll start with you, if that's okay. So in the world of projects, the new, big, exciting project is something we tend to focus on, but I've just got a question about how much do we need to pay attention to resiliency, optimization, and life cycle of our existing projects, existing assets?
Yeah, I'm sure Melissa will probably have some thoughts on this as well too, but look, I'll keep it simple. Trans Mountain's role is to deliver the benefits of market access and transportation of our resources. So as we talked about, there's a significant economic benefits of all that, but tankers and pipelines can do great harm. And so our role is to make sure that the benefits are realized and the harms are not. And that requires a strong operating company. It requires a responsible operator who does the right thing without being asked. And that's what I see our role is. And so we talk about, as you said, all these big projects and what's the latest thing. Day to day, what our team is doing is making sure that our system is safe and it's delivering 890,000 barrels a day every day. And if you can't do that, then you won't have the ability to do anything else. And so reinvestment in infrastructure, integrity of infrastructure, safety of workers, safety of the public, it's what the whole thing's built on. And that's why Canada, we can do that in Canada. We're very good at it. And that's what gives us the opportunity to do more.
Thank you. Jen?
Yeah, with these LNG and natural gas development, where our planning is in the decades, and this commitment to responsibly producing the molecules is foundational to our relationships with our Indigenous partners and neighbors, and PETRONAS's commitment in terms of globally on the commitments towards the energy transition. And so we'll see a lot of our capital and our efforts is focused on continuous improvement. We had our upstream is certified by Equitable Origin as responsibly sourced gas. And that's very much a sign in terms of the commitment to continuous improvement. And we have the lowest value chain emissions globally coming out of the Montney and LNG Canada, and the lowest methane intensity as well. And that's, I think, again, foundational for PETRONAS, but also for British Columbia. And we'll continue to be investing towards that continuous improvement.
Thank you.
I do want to add a couple of comments. So we've got some fantastic programs at BC Hydro that help industrial customers, commercial customers, and residential customers be more efficient. And really, ideally, we'd like you all to use a little less power. And if you can use a little less energy, it really offsets the investments that we have to make to bring on new resources, new power. And so those programs are really helping us defer some capital investment. We're also looking at, as we replace aging assets, and I'll take a generator or turbine that's 50 years old, if we can get an extra 20 megawatts by putting in a more efficient unit, that's good value. And so we're looking at things like that. Can we run our distribution system in a slightly different way using more sophisticated tools now to, again, offset investment? So those are some of the work that we're doing. So we've got to continue to reinvest, we've got to innovate, and then we also need to bring on new kinds of resources as well. So we've got this balance that we're working through.
Thank you. Rehan?
I'll just briefly add, I think this is all really valid points, and our requirements for energy aren't pausing until we build everything that we need to build out. So to your point as well, if you look at aging infrastructure that we have that needs to be replaced, it needs to be upgraded, we need to invest in sustaining capital. I think that's really extremely important. And if you look at the return on investment on your dollars spent on sustaining capital, you know this well, it's obviously much quicker than the 10, 15 years that we have to build the major projects. We definitely have to continue to do that, but we also need to, and I'll go back to the analogy of building the plane while in flight, we have to make sure the plane stays in flight. So extremely important to invest there. We also need to look at, and this is maybe a mix between the major capital spend, but also when we're looking at resilient networks, but also how we share energy between regions and provinces. There's no real interconnected link for us to be able to share surplus energy and also to balance our grids. And that will come through upgraded infrastructure and also investing in stable capital.
Thank you. All right, to our final question. We'll start with you, Shannon, which is looking 30 years ahead, which is not a long time for the energy infrastructure sector. What does the energy mix and network look like?
Well, it should have, for British Columbia, a heck of a lot more LNG is really what's critical in terms of seizing on the opportunity that is in front of us and what can drive economic growth and prosperity.
Great, thank you.
Yeah, I mean, without pointing to a disclaimer on forward-looking statements, the next 30 years, I mean, we see it now. What we're building now is going to be the energy mix of the future. If you look around at all the projects that are ongoing right now, what we have in production, that is going to be the mix. The exact makeup of that mix is going to shift based on our own consumption habits. And I actually do see us going towards a generational shift and really thinking about how we use energy on a personal level, on an industrial level, pointing to the fact that can we use a little bit less? Are we willing to make trade-offs? And that's going to help us extend what we have in terms of capacity now, but also, look at the mix in the future.
Thank you. Melissa.
We are seeing a shift in our provincial map and where we built resources and the Peace and the Columbia, and we've got a load center in the Lower Mainland. Our maps now look really different. Our load centers are spreading out around the province, and an energy mix for us in 30 years looks like resources being located close to those load centers. And when we look at call for power, we've got 2 out. We're seeing an interesting mix of renewable resources, not just hydro, that are coming on. And so a healthy system that drives a healthy economy will have a mix of different kinds of resources located closer to our new and emerging load centers. And that's just going to be a fantastic place for us to be as a province.
Thank you. And final word.
And I'll keep it short. I think the energy mix is changing, and I think that's a good thing. I think our use of petroleum will continue, albeit less perhaps for motor fuel. As North American and Western countries' petroleum energy peaks and starts to decline, world markets are going to become increasingly important. And what's happening in those world markets is that petroleum is being used not just for motor fuel, but for precursors for construction, for fibers, for plastics, for construction materials.
Thank you. Well, I'd like to thank all of you. That was fantastic. Appreciate it.
Thanks, David.
Thank you.